Welcome, everyone. I am here today with co-founder Esther Romanoff. Today, we're going to talk about the Texas Stock Exchange and some company fundamentals as well leading up to that. Esther, do you want to kick us off?
Of course. Okay, so we know the Texas Stock Exchange is coming sometime in 2025, so it's soon, but they haven't really released a lot of information on like what the prices are going to look like to IPO or what the prices like make or take your fees or whatever they're going to use to actually make the revenue. It's interesting that Blackrock and Citadel were like, here's my name on the list of investors or a list of people in there. First of all, to obviously give reputability for Texas, right? The stock exchange itself, because then it's like, great, we have two of the biggest players in the game that signed on. But we don't exactly know whether like what kind of deals they made, whether they made any deals on like lower fees or what their kind of contracts look like, which is fine. But yeah, I'd be curious to see what the IPO cost is. They did mention that they were going to be a little bit easier on business owners to actually list. Right now, NASDAQ and New York Stock Exchange and a couple others, I think they have a $1 limit where if your stock price goes below $1, they delist you because it'd be considered a penny stock. I think they're probably going to stick with that limitation, but I've heard that they're going to like remove the limitation of diversity DIE stuff, which is controversial for sure. But it hilariously enough, in my personal opinion, it relates to Texas's culture, which is very much you do what you do. We don't kind of mess with other people. So it feels applicable. Like it's like, okay, they might want to do this because they're culturally similar in that sense. It's interesting because there are actually quite a few companies on the stock exchanges that are Texas companies, like Tesla and Nvidia, just have like a lot of the price to book ratios are really high generally, but the specific Texas companies that I saw were like Tesla, Exxon, Oracle, Caterpillar, AT&T, and all of them are above 100 billion, like well over 100 billion. So Texas companies on the New York Stock Exchange, there's around 3 to 4% of the stock exchange, of the value in those companies. So even if they co-list with the Texas Stock Exchange, right? They don't remove themselves from New York, but they're like, hey, we're gonna also list here. They're already going to have probably enough like want or demand with the companies that are currently listed in Texas generally, like as a state registration, which is pretty promising. It's pretty good. I think that this is something that there hasn't been a new exchange in the US launched in forever. So it might be really good to have a up-to-date, clean exchange start, right? With all these new technology and AI tools that I'm sure NASDAQ and the New York Stock Exchange are still on with, but just to get the slate entirely clean and start from scratch, this is going to be fun.
Yeah, I love it. The competitive pressure is gonna be really interesting, right? If we look broadly, NYSE, I think 26 trillion trading volume annually, Nasdaq roughly 21,
Yeah.
and then the next thing down is Shanghai, I think at 9.5, and then some of the other ones are like 4.5, 4 trillion in terms of exchanges around the world. I think London's down to like roughly 4 trillion. So this is dramatically different. There's roughly four from China that I know of, and so if you add them up, they're roughly around like 20, 21 trillion. But then you add up the two U.S. ones, and we're like 40, 46, 48, something like that, right? So where is the Texas Stock Exchange going to land in this? How much is it going to kind of take from like the co-listing that people are talking about, and would it bring any new? I don't think there would necessarily be a lot of net new. I think it would be, but we'll see, right? Because like there's only so much company market out there, right? So like I don't think there could be a lot of net new, except for somebody who maybe doesn't want to list on the other ones because of say the regulation differences or the costs, right? Because those are the only net news. So most of it would just be like a transfer, and so how much transfer from which different exchanges are people going to transfer? And yeah, the DEI and kind of stuff is one of the major differences that people are talking about, right? Controversial or not, like that's the news. So the regulation differences, the pricing differences. I think what three. I don't know if we said this already, but $300,000 roughly on NYSE, something like 160,000 for listing fees on Nasdaq, right? You have your $25,000 application fees, and then you have your $70,000 to $80,000 roughly annual fees as well. And so this is areas for the Texas Stock Exchange to kind of compete. So and then also the Texas Stock Exchange did raise 120 million, which is the largest ever raised for an exchange, I believe. So very, very interesting on the stock exchange. Esther, I know that you have been a trader before. What are some of the things you've enjoyed about trading? What do you think is interesting lately?
Well, one thing I find really fun is like people say that the market is always accurate. Like no matter what, like if an event happens, it like pretty much auto adjusts for it. And sometimes it doesn't even adjust at all because they like pre-priced it in. The whole buy the rumor, sell the news, right? By the time it starts as a rumor, it's already pricing its way into existence. So when it happens, usually the stock doesn't move or it drops a little bit. So I've been studying a lot, just general finance fundamentals. And the thing that I find the most interesting now is like the difference between the price of the stock and the book value of the company. So I guess I'll talk about that because I've been deep diving in a little bit more. It is so wild. Like a lot of the tech companies are between 12 and sometimes 30. I think Apple was like 48 times the price, the book value on their accounting. And some of it has to do with like all the patents, right? All the patents that Apple has in a lot of these giant tech companies, technically on book value, they're depreciated over 20 years, right? Versus in the stock, they're actually, the more you have, the better it is. So a lot of it isn't in the price that it should technically be, like price to book of 1, right? That would be the same as the book value. And because it's so much higher, it's like, well, yeah, the patents that you depreciate away, they're actually increasing value the more people use them and the more, Apple has a limited range of people that can build off of their tech, which is really cool. Supply chain is another thing that isn't in there. Like the fact that they have a phenomenal supply chain, they've always got good margins on it. You can't put that on a balance sheet. That's not a thing, right? And sometimes it increases the lifetime value of the customer so much that the multiple on the books is so high. But that also is interesting because when recessions hit, or if the future lifetime value of a customer all of a sudden gets chopped off because of something like COVID, for example, I feel like those stocks that do have giant multiples on the book value of them drop further because a lot of their value price-wise of the stock is made up of these intangibles that dictate price to a certain degree of the stock itself, not the book value. It's kind of
I
cool.
love it. I love it. Great insights.
Yeah.
When me and you like to look at company fundamentals and all the stuff that we do, what are some of your thoughts around company fundamentals if people are thinking about growing their companies to an exit, whether it's M&A or a stock exchange, right? Like how do you see that they should be thinking about it?
Well, I think a large thought process is already put into the things that help. So, like the network, the ecosystem that you're building, like the loyalty of your customer. How loyal is your customer? Like Apple, for example, right? Not only are they going to buy a phone, they might buy the watch and the laptop. And if everything communicates with each other, you've not only solidified the fact that that customer is going to use your products, but also extended it that the future products will be used because they all talk together. So the more there's a network around, which I think is why social influencing is a thing, right? The more there's like a network of community and communication between the things themselves, the higher the value, the higher the stock, the higher the IPO, in my opinion, if we're talking about intentionals. But I don't know if that entirely answered your question, but that's where my head took it. So
I love it. I love it. Yeah, and I'll end by saying in our last minute of this video, my thoughts around just like the company fundamentals. Me and you are talking about this all the time.
yeah.
Right. Generally, when you can start a company, we want to look at what is your unique value as a human being. What is your kind of like last 5, 10, 20 years of experience, because that's going to be baked into the product to where you're more than just a mathematically efficient way of growing whatever the product and service is, but you're kind of baking in your experience, your knowledge, and creating that defensibility. And that defensibility is going to be your price point. And also that defensibility and that skill set and experience is going to be what attracts customers, right? So if somebody wants to be growing a company right now, thinking about growing massive defensible media, more valuable than getting money from your profitable unit economics or from investors is actually creating a defensible media, because we are in an attention world. We have a lot more AI outbound, and that's diluting people. And so to be able to build a defensible media that can pull people in is really, really important. And you're going to do that with entertainment and education in that media, as opposed to, if you think of like Red Bull, they're not talking about the drink all the time. It's skydiving from space. It's bikes. It's racing, right? There's all kinds of like, you have this education and entertainment, and that's an interesting thing, right? So when we create this interesting media and then use that to launch tons of different products and services, and use your defensible skill set that you increase over time, your path of increasing defensibility, to increase your price point, to keep off competition, we are then going to create the metrics that are needed for an exit for a high revenue or EBITDA multiple where you have great gross margins because your defensibility from your skill set, that's literally what creates your gross margins and your net margins in general. And it's going to increase your repeat purchase rate. Is if you're choosing a hard problem. Thank you, Esther, for chatting.
Of course. Thanks for the invite.